What's going on, traders? Welcome to another episode of FX Hangout. Please make sure, if you haven't already, like and subscribe to this channel, and make sure that you look at the disclaimer in the next slide. Let's get started. Traders. So today we're going to be going over Fibonacci 101. Just going over the basics of Fibonacci and giving you a brief understanding of it so that way you can start utilizing it in your everyday trading. Now, this tool is mainly used, well, in my trading strategy, just so that way I can indicate how far the market could possibly pull back before continuing on with the trend that it's currently going. So in instance, what this looks like is, say for instance, you have a downtrend. Okay, you have a downtrend where the market is making lower lows every single time. Well, we understand that in a downtrend that the market has to pull back in order to get ready to brace itself for another continuation of that trend, correct? But what we as traders have a hard time doing is notifying or seeing how far this market could possibly go back before continuing on. Now, in my mentorship, I talk about how pretty much gives you those pointers and telling you how far the market could actually go back, and explaining in detail that the market can come all the way back to previous structure high, right? And if it does not break previous structure high, then it could then continue on going back with this trend. All right. Now, again, that was not meant to really get too much, but it's basic structure. Pretty much, you can go on YouTube, you can look at other videos that I have on YouTube, or you can just simply look up structure. That is the basic point of structure. In order to have a downtrend, you have to have a continuation of, making lower lows, and it has to respect previous structure high. But like I said, where Fibonacci comes into play is that it will give you coordinates where the market could possibly pull back and start to show you where, in fact, or those extra signs of reversal to continue on with this trend. Now, there are a lot of different ways that people utilize this Fibonacci tool, but far as the pullback zones for this Fibonacci tool, I would say that it's universal. Some would probably disagree and agree, but far as from my own teaching and what I've heard from different mentors and stuff like that, they all utilize the same pullback zones. All right. So I'm going to show you those pullback zones in just a minute, but first I'm going to show you how to utilize this tool. So on a downtrend, if you notice that the market is making consistent lows, right? Not breaking previous structure high. All right. The way that you want to utilize this tool is you want to measure it. Start the measurement from where the pullback last stopped. And then you want to measure this all the way till where the new pullback started. So again, you can write this down. You want to measure from where the last pullback stopped, which was the previous high, and you want to measure that towards where the new pullback started. All right. Now, the reason why you want to do that is because what that's going to do is you want to find out your new measurements of your new pullback. So that's why you want to say, okay, you want to go from previous pullback to the new pullback. Because basically what that's going to do is it's going to give you an equilibrium of how far this pullback here could go before continuing on with its trend, its downtrend. So let's go ahead and take this Fibonacci tool. We'll take our Fibonacci tool and we'll drag it from, like I said, previous high, which was our past pullback, where it ended. And we want to drag that all the way over to where the new pullback is and where it started. All right. Now, the easiest way to do this is when you're using this tool. All right. You just click one time and then drag. All right. And then drag that to where the new pullback started. And then, of course, the way that you want to, if you don't want to have all your numbers and lines kind of bunched up together on that, so that way you can kind of see where the price structure is going. I suggest moving it out here. All right, that's what I suggest doing, so that way you can kind of see where your lines and where price action is actually going. And of course, I'm going to show you on an actual chart, so that way you can see this in an actual live space. All right, now your numbers may not look like this. Okay, it may not be clear as this. All right, and just to let y'all know, I am utilizing the platform Trading View, just in case if you couldn't see before. I am utilizing Trading View. All right, so you want to right click, so that way you get your menu up. You want to go to settings, and you're going to see a bunch of coordinates. Now notice that these are already pre-populated with different numbers and stuff like that. You don't have to change these numbers at all, but you just want to pretty much just copy what I have here. Okay, and then just make all those colors black, so that way you can do it, or you can leave them as such. But most importantly, what you want to do is you want to make sure that the colors are gone, so that way you can see them. So you see how mine are clear? Yours might be like colored in. So in order to change that, you have to go. Oh yeah, first of all, make sure that you change these numbers. These numbers might be on this side, so you want to change them to this side. In order to do that, all you have to do is come over here to label, and then change it from left to right, as I did. That's how you change them over to this side instead of having them on this side. All right, now your background is pretty much, as you can see here, you want to make that clear, right? Clear as you can, or not have one at all. If you uncheck the background, then that's going to deselect your back color. So that's all you have to do. And then once you're done with that, just push OK, and then you should see something similar to what I have here. All right. Now, if you notice that I have, oh, Adrian, you have red colors in line. Like I said, pause this, rewind, and then you can see what the color spectrum I have for each and every one of these. Okay. So that way, if you wanted to copy exactly what I have here, all right, as far as with the lines. Now, the most important pullback zones that you want to make sure that you pay attention to, as far as where you can find reversals, are going to be the 38.2, first pullback zone, the 50, the 618, the 786, the 88.6, and lastly, the 1. These are all the pullback zones, or these are all the pullback zones in which the market could go back to, right? Throw some type of reversal pattern and then continue on with the trend. All right. Anything less than that is not considered a pullback, a full-fledged pullback. So you see how I have the 0.236. Sometimes the market will hit there, and this is definitely a note to self. You want to write this down. Sometimes the market will hit there if there is a very, very powerful trend. A lot of times the market will not do full pullbacks. Sometimes the market will come back here, consolidate, and then drop some more if there is a strong trending market. So don't be surprised if you see this sometimes and you plot the Fibonacci and you notice that, hey, well, the market keeps on hitting off the 236. Is that a pullback zone? No, it's not. It's just one of those areas that the market can kind of relax on before continuing on. Like I said, if news event comes out and the market was already going in that direction anyway, you notice that it was in a huge consolidated market prior to that, where it was like weeks of consolidation. A lot of times the market, when it drops out of those consolidation points, it drops or it rises extremely high, extremely low, and it does not take the time to pull back a lot. So a lot of times you'll see, well, I should say sometimes you will see where there's occasions where the market will pull back to these 236 zone. Now, each and every one of these pullbacks that and I'll type them down for you so that way you can go ahead and have those down, like I said. But y'all can pretty much see them right there. So it's going to be the main pullback zone, the major pullback zones, PB zones, are going to be 0.382, It's going to be 0.50, 0.618, 0.786, 0.886, and then 0.1, which is pretty much 100. That's what that stands for. All right. So these are your major pullbacks. And let me make that smaller so that way you can fit everything on here. So these are going to be your major pullback. All right. So that means that anytime when the market comes to these areas, what you're looking for once it comes here is you're expecting the market to do a few things. All right. Once the market gets there, you're expecting to either consolidate, throw some type of pattern in reverse, or just throw a reversal pattern. Sometimes the market will just consolidate, and that normally is a sign that, hey, we can start to see that this market may be throwing some type of sign of reversal to continue on with the trend, or you might simply just see a reversal pattern like a head and shoulders, a M top formation, anything like that, and then boom, the market will then continue on. So pretty much that's what you're expecting. Every time when the market comes back to one of these points, you're looking and waiting, I should say, waiting for the market to show you some type of sign that, okay, the market is done. It's at the 618 zone. Cool. Now it's getting ready to go down. All right. Now I could go even further depth with these zones, but I just want you, I'm making this as a 101, the basic concept of the Fibonacci. So that way you understand how to draw it on here. I know that was one of my major questions that a lot of people was getting is I'll make another video explaining in detail about these zones and the importance of each and every one of these. But for right now, I just need y'all to know how to draw this up. Okay. So again, once you plot it, it plots and you'll see where the market actually hits off of these pullback zones. Once it hits off these pullback zones, then you'll wait for a reverse pattern. All right. Once the reversal pattern has happened, you will have some type of sign to jump into the market so that way you can enter. And that's simply how you utilize this tool. All right. That's the basic concept of it. Now, again, if you wanted to put it as a rule standpoint and you wanted to say, hey, well, Adrian, I need some type of rules to know that how I'm utilizing it. So the first thing you want to do is first identify your trend. All right. Identify, is it a downtrend or an uptrend? Once you have identified that, then you know your second step is plotting your Fibonacci. All right. Plot it from previous structure high, which is your last pullback zone. And you want to draw it all the way down to where your new pullback zone is started. And you want to drag it to the right. So that way you have room to see how far it's going to pull back. Once the market has started pulling back, then you want to see where is it going to plot. Is it going to plot at the 38.2, the 50, the 618, the 786, the 886, or the 100 zone? Once it has plotted at the 100 zone, you will then see a reversal pattern, M top, head and shoulders, some type of formation letting you know that, hey, this is the zone that the market is going to rest to continue on with the trend. Once you have gotten that, that indication, you will start to see patterns of continuation back with the trend. And that's how this this tool works. It's not a strategy, it's a tool. Okay. Some people will plot strategies around it, but for the most part, it's a tool to utilize so that way you can see how far the market will pull back before continuing with the trend. Now, on another standpoint, and then again, like I said, I'm going to show you this on a real active live chart. Say, for instance, you had an uptrend. Now, what is an uptrend considered? What is the rules on an uptrend? All right, it has to break previous structure high and it cannot pass previous structure low. So in this sense, again, what you are doing when you are trying to plot this particular, when you're trying to plot Fibonacci, you want to go first from past structure low which is the last pullback. As you can see, this was the last pullback. The market went up and then it pulled back right here, correct? So now you got this other high right here, and you notice that it started pulling back right here. The market started pulling back right here. So now you want to measure this out and you want to say, okay, it started pulling back. All right, it started pulling back. Let me go ahead and plot my Fibonacci to see if it had already hit a retracement. And as you can see, it has. It already hit the 50% area. So now, based off your rules, what you're waiting for is a reversal pattern to tell you, hey, the market is done pulling back and now it's getting ready to continue on with its trend. And that's basically how you do it. You draw it from past structure low to new structure high, and you're waiting to see how far it's going to pull back. Well, Adrian, how do I know when it's going to pull back? Well, see, that's the thing. You plot the Fibonacci once you see the pullback. It is not our job to play this, ladies and gentlemen. We just simply want to see when this is, because say, for instance, we're looking at this chart and the move already happened. The uptrend is already continued. So that means that in order for us to enter into this market, we must wait for a pullback to happen. Once the pullback has happened, that's when we can plot our Fibonacci to start looking for our signs to enter, following our rules to entry. Okay, so now we're going to go ahead and take a look at this on an actual chart. So let's take a look at this. All right, so I'm going to go ahead and scratch this. So say, for instance, we were looking at previous structure, and we were looking at this current downtrend right here, okay? You see how the market is making lower lows and lower highs, correct? So say, for instance, we wanted to measure out this particular downtrend, this low high going into this low high. This is previous structure right now, all right? We would then, first, I have to identify what type of movement we are in, and right now we're currently in a downwards moving pattern, correct? As we can clearly see, lower lows are being created. We take it from our high point and we want to measure out to our low point. Draw it over to the side. We then see how the market pulled back into our 38.2 zone, which is our pullback zone. After we discovered that it has now pulled back to a 38 position zone, we are now looking and waiting for some type of signs of reversal to continue on with this trend. As you can see, we have that with this reversal candlestick pattern. We have ourselves is what is called, I always get these confused, morning or evening star. And as you can see how the red candlestick engulfed the blue candlestick, giving us that strong sign that, hey, we have now have continuation of this pattern. And as you can see, now we have movement to the downside. Similar to what is going on right here. Now that we have impulse move and we have a lower low created, we already understand that the market is in fact still in a downtrend. So what we do is we then plot once again from high point to low point, and we drag over to the left. Now, one question that you may have is, okay, well, Adrian, where do I plot it? Do I plot it on a wick or do I plot it on the body? On the higher time frames, I suggest plotting it on the wick of the candle of the actual bearish or bullish candlestick that is going to go, that actually started to move. So in this case, this was the red candlestick that started to move to the downside. So I want to plot this from the wick, all right, all the way down to the wick where it started to go to the upside, which is going to be this one. Well, actually, this particular one right here, we can plot it there, or you can plot it here. It's very much preference. So as you can see, the market is now continuing to the upside. It's already hit the 38.2 zone, but do we have signs of reversal? Absolutely not. So we know that the market still is in fact pulling back. And now all we are waiting for at this point is some sign of reversal, some type of engulfing candlestick or M top or head and shoulders formation, letting us know that, hey, this market is now in fact tired of going to this upside and pulling back. Now it's getting ready to continue on with this trend. And that's how you utilize it with the downtrend. So let's go ahead and utilize it with an uptrend. I'll try to find or I can just keep it here. Let's just keep it here to be easier. Let's look at this past previous structure. So if we were looking at this move to the upside, we say, okay, this movement to the upside, and then this pullback here. All right. Now, in order for us to utilize this one, again, we have to take it from move from the upside, all right, and then pull back to the downside, right? So we take it from our move. This was our starting push to the upside. And then this is where our pullback started. So we go from the bottom all the way up to the top, and then we drag it to the right-hand side. Once we have dragged it to the right-hand side, now it's up to us to identify how far this market is, in fact, pulling back before reversing. And as y'all can see, this market, in fact, pulled back to the 50 zone. Once it had pulled back to the 50 zone, our next portion of our rules spaces, we're waiting to see what, in fact, the market is going to give us to show us that the market is going to continue on with the trend. And what do you see here, ladies and gentlemen? We see a W, which is a reversal pattern, allowing us to see that this market is, in fact, not done going to the upside, right? Because we have a low point right here. Let me get rid of this Fibonacci. We have a low point right here, and then a retest of that low. That is what we call reversal pattern. Now, later on, we may have another video going over reversal patterns, so that way you can kind of put this, apply this to your rule base of what you already have with structure, and then also your rule base, what you have with Fibonacci. So then you can start developing a trade strategy. So that's what all of these videos are about. So you have that W top, not breaking previous structure low. So that shows you, hey, now it's time for the market to start going up. And as you can see, the market started going up at that point, creating more higher lows, higher highs, and continuing on with this trend. And ladies and gentlemen, that is pretty much wrapping it up, pretty much giving you everything that you need to know on the basic 101 on how to use Fibonacci. Again, if this video is very helpful for you in understanding this, please make sure you like and subscribe to this channel. All right. And also, we are going to be giving away a free FX Hangout t-shirt and the next 100 subscribers. So again, we've already given away a free t-shirt already. When we've hit 1,000 subscribers, I will be giving away $150, and on top of that, one of our cool t-shirts as well. So please make sure you subscribe to the channel. Make sure you support the channel if you feel like that these videos are helping you in improving on your trading techniques. You have a good one. Peace.